This week, you wrote that Tesla shares could gain 30% in the next 12 months as robust demand in China and new factories in the US and Germany spur growth. We're going to get to that in just a second. I want to start, though, with this recall. Investors are basically saying this isn't a concern. Do you agree?
Yeah, I mean, look, recalls, you don't want to see them, but relative to the scale, it's not that big of a concern. And also, relative to the actual cameras and rear trunk, from a technology perspective, it's a pretty easy fix. And that's why investors are kind of shaking this off as more noise rather than something broader.
Dan, let's talk about for a second, if we can just zoom out from Tesla. Tesla is, of course, the poster child of the EV space, but you also cover a few more names. GM is one of them, and that's really the one that kind of caught my eye when we're talking about electric vehicles and what's going on. Once upon a time, Dan, GM used to be kind of this poster child, the stock market indicator of whether the economy was doing well. To what extent has GM kind of lost its groove and perhaps regaining it by entering the EV space?
Look, I think that's really our focus, I think many investors' focus going forward, is that this could be the transformation of what Mary's doing and the team in terms of EVs. If they convert 10% of their base in the next 3 to 4 years, ultimately we're looking at what I believe is a $100 stock for GM. A lot of shortfalls over the last few years. If you look at this green tidal wave, $5 trillion that's going to be spent, it's not just Tesla that's going to benefit. We think massive re-ratings in names like GM, Ford, and VW on this EV, what I view as basically the biggest transformation of the auto industry since 1950s.
Hey, Dan, I want to get back to the note that you wrote earlier this week. You said that Tesla shares could gain 30% in the next 12 months as robust demand in China and new factories in the US and Germany spur growth. You didn't change your price target, we should note. It still maintains outperform at $1,400 per share. I'm wondering, though, what specifically was it that caused you to write this note? What did you see come from Tesla that made you so bullish on the China story?
Yeah, it's the demand coming out of China. I mean, all of our work shows we could be looking at what approaches 50,000 per month run rate. You think about earlier this year, China was the biggest headwind to the story. I think that starts to be a tailwind going to 2022, but also it's about Berlin and Austin build-out. Capacity expands. That could be potentially 2 million units from a capacity. And when you talk about EV, it's all chasing Tesla. Their biggest moat, it's not just the brand, it's the supercharger network and the scalability. And that's something that just further increases when Austin and Berlin come online in 2022.
Dan, that's exactly where I want to go next. Very quickly, I want to talk to you about Berlin, about Germany, and how really that's becoming kind of a new place for Tesla to expand their factories, as well as a new place for some of that kind of chip-making capacity. Talk to us a little bit about the European operation.
I mean, Europe right now is really on what I view as an inflection point in demand for EVs. We're seeing massive shifts. Of course, Polestar, VW, and others going after the market. But with Tesla, they need to have that flag ship factory because of the logistics. Right now, if you're in Germany and you want a Tesla, that car is getting produced in China, shipped to Germany. The logistics is a Rubik's Cube disaster. Berlin's important, not just on a margin perspective, but to really expand their foothold in Europe. And that's no different what they're doing within the U.S. and Austin, where that's really going to be a very important ingredient to their recipe for success.